Yo, what is up, guys? Welcome back to another video. In today's video, I'm breaking down the one and only trade that I took on Tqqq today. I took 200 shares, slightly lower size. That way, I could not lose as much on this just because it wasn't as high probability, but it ended up being a green trade. So with that being said, I'm going to break down the exact trade for you guys. So, as you can see on my screen, I have Tqqq pulled up. Now, I typically like to do it with QQQ. I don't know if that red thing was on my screen. Whatever. Anyways, so QQQ is normally what I chart on, but I was on Tqqq today. I'm just going to break down the exact trade that I took. So we had a trend up overnight. We go in the 5-minute time frame. This was trade from yesterday. If you didn't see that, it's a previous video. So overnight we trended down. We ended up finding a support in this area. Surprise, surprise, that support is this previous resistance right around here. Boom, we broke above, retested, and then we come back and find support. So I just want to show you guys this strategy. I also found another entry in the pre-market. I didn't take it, but it was in the pre-market. Here's the strategy. Boom. 15-minute candle wick. I'll just take this off. 15-minute candle wick right there, right? This red candle is larger than the body and the top wick, and it comes into an area of support. So previous resistance turned in support, boom, and then we get a bounce right out of it. So you could have taken that. If we mark out the box real quick, I'll show you exactly what I'm looking at. You could have taken this trade, mark out the box, boom, boom, and we go down 2-minute time frame. 2-minute time frame looks like this. So technically that 15-minute candle started like right around here, right? Or maybe earlier. No, it was like right around there. Yeah, right around this area is when it started, or right around this area, I believe, is when it started. So during that time, this candle closed within this box, technically, right? It's not moved over all the way, but you get the point, right? The candle closed within the box, and then we had a green candle close outside the box. Your entry would have been right here, and you would have set stops below this low. Another confirmation would have been that we bounced already in this area, and then we bounced again right here. So, but that's not what this video is about, okay? Video is about the strategy, but it is not about this exact trade. So with that being said, let's go over the actual trade that I took today. The actual trade that I took today did not have anything to do with that strategy, but that strategy did end up playing out later on, which just gave me further confirmation for this exact trade. So the initial thing that I was looking at on today's price action was a break above this orange line right here, which was the top of the 15-minute opening range breakout. The 15-minute orb strategy, pretty simple. Okay, we had a 5-minute candle, 5-minute, 5-minute. Boom, there's a first 15-minute. This would be the low. I didn't mark out the low because I was pretty bullish and we were bouncing off of this. And then I did mark out the high. We waited. We got to close above this high, but this candle was not bullish. Why? Because there's a top wick on it. I didn't want to take it off this candle, so I waited. Just didn't like the price action there. And then we ended up pulling back. And in this case, I probably would have been stopped out, to be honest, if I would have taken this. But we pulled back, found support off of this 13 EMA again, bounced right back up. This candle closed above. This candle looked bullish. We had a nice wick off of there. I took it just after this candle. Obviously, you can see I took it here at, was it 72.58 was my average fill. So that's when I entered the whole position. So we bounced up here. And then I zoomed into the 2-minute time frame. This is the right day, yeah. Zoomed in the 2-minute time frame, waited for some bullishness off of this, right? I liked this candle, We started pushing up. I thought we were going to end up pushing up to the highs. We didn't exactly, right? I thought we were going to get a strong push off of this, but I still waited for this bounce off of this 13.48 EMA on the 2-minute time frame. Entered right here, 72.58. Set my stop at a 1-to-1 risk to reward. My only reason for setting this at a 1-to-1 risk to reward was because highs, the liquidity at the top was so close. So if you look on the hourly time frame, this was the liquidity I'm shooting for. This push up, push down, that's a high right there. It's 73. You can see it on the right hand side, 73.21. So knowing that 73.21 would basically be a price target, I'm just going to shoot for a 1-to-1. So what am I risking? I'm risking 50 cents. I'm going to aim for 50 cents. So that's exactly what I'm doing here. So go back and down to the 2-minute time frame, and you can see I had my stop, 50 cents, boom. So it was a 1-to-1 risk to reward ratio. And this ended up being absolutely perfect, right? Since we had this aggressive move up with all these buyers right here, we came right back close to that. Now, I'm not gonna lie, I did think that I was gonna get stopped out because this candle moved up so quickly that I thought that we were gonna have some leftover orders stuck there, and that we're gonna have to push back down below that candle to actually grab those orders. We didn't end up doing that. I kept it exactly how it's supposed to be, and then we have support off the 48 EMA, and then we had a break below the 13 EMA. I was getting a little bit worried there with no progress to the upside, but 48 came in clutch perfectly. It matched up. It started moving up and matched at the bottom of this zone, so that held as support as well. And then we had the nice push to the upside, finally hit the take profit. I didn't actually sell here. I broke one of my rules. I didn't actually sell here. I wanted to see if I could get 75 cents per share, right? We came back down. So about, I don't know, maybe 10 or 5-6 minutes later, whatever, right? After it would have hit my TP, I'm sitting here thinking to myself, what are you doing? You set a 1-to-1 risk to reward ratio. Take the 1-to-1 and quit fucking around. And that's exactly what I did. I quit fucking around, and as soon as we pushed back up here, I got out on this candle. So it was exactly a 1-to-1 risk to a reward ratio. Obviously, you guys can see I could have held this thing. I could have held this thing for a 2-to-1 risk to reward. I didn't know that it was going to exactly go up all the way up here. I did have a level marked out, or not exactly marked out, but I did have an idea that it could possibly go up and take this high up here. We didn't actually do that, but we did push up a little bit further than I expected. So overall, that was the trade. Those were my reasonings for getting in the trade today. Set my 1-to-1 risk to reward ratio, and I left it at that. And that's pretty much it. It was a pretty simple trade, somewhat stress-free except for this right here. But other than that, it was a pretty solid. It was a pretty solid up day. So I just want to let you guys know. Watch this strategy. Watch the shadow strategy, right? And you can see this play out on multiple different time frames. And all you have to do is combine the shadow strategy with common sense. You don't just take it just because that's what it says. Use some common sense. So, for example, this day right here, boom, over in the morning, I see it play out right here. I'm like, okay, I could take an entry if I wanted to. I didn't take it because I'm still somewhat new to this, but you could have easily taken this because price came back into support. Boom. And then we bounce out of it. That's it. That's all you need. All you need is a perfect example like that. Where did price come to right here? If we go on the hourly or we're on the 15-minute, there's a huge gap right here. We pulled straight into that gap, formed a 15-minute candle with the wick that's larger than the body and the top wick combined. And what do we get? A move straight out of it. Use common sense. Don't just take it just because the candle is, facing whatever. Like, you could take this right here and you could be like, oh, we're bearish. We're not bearish because what is going on here? First of all, buyers are pushing this back up. Just because this candle forms doesn't mean that we're automatically bearish. You could say overall we were bearish. Yes, we were overall. But look at the previous candle. Why am I taking this? Literally buyers push us, or sellers push us all the way down, and then buyers push us all the way back up. This is not the fall. This doesn't mean that the following candle is automatically whatever the previous candle was. So just keep that in mind and use some common sense with the strategy. And I promise you, it will start to make more sense. Another example, sorry, I'm already just rambling on, but another example, look at this right here. Candle wick that is longer than the body and the bottom wick. Boom, right there. And what do we get? We get a freaking reversal straight back down to 50%. I think this is 50% retracement, I want to say, of this low to this high. Fibonacci, throw it in there. I don't even care. Hopefully, you guys learned something from this video and can apply it to your own trading. I'll see you guys in the next video.